Hi everyone, this is Tim Allen with Massey Allen Group at Compass. It's January 15, 2026. Let's try to cut through the noise and talk about what matters most to buyers and sellers in Contra Costa County as we are in Q1 of 2026. Right now, we're kind of seeing more of the same as last year. There isn't a catalyst that's really driving more inventory to the market or significantly changing buyer demand. Rates are stable. So we have a relatively stable market, same as Q4 of last year. But at the same time, we do have some policy changes in place, or at least pressure for policy changes to drive mortgage rates lower. If rates do go lower, we should see an increase in buyer demand. We should see buyers come off the sidelines. And in a market like ours, where our housing supply is relatively fixed, and what I mean by that is the rate at which the inventory hits the market is relatively fixed right now. Additional demand added to that equation is going to put upward pressure on prices. So I think that the window for buying opportunity if mortgage rates fall is going to be, a relatively short window. Will be a quarter, 2 quarters, 3 quarters, a year, somewhat longer. It just kind of all depends on how much movement we get in rates and how significant it is. Okay. Locally, we're still dealing with a mixed market. Some sellers, depending on the product and the sub-market that they're putting that product in, are experiencing a slight seller's market, while not a majority, but a significant other part of the market is experiencing an imbalanced market, where you might only have one offer. You got longer days on the market. You have less leverage. Buyers are getting some of that leverage back to that side, and the difference really isn't luck. It's how well do you understand your product? How well do you understand your sub-market that you're putting the product into? So what does this mean for you? For buyers, the advantage usually goes to the buyers that are ahead of the market and take action before interest rates lower and competition increases. Sometimes waiting for perfect conditions can cost you more money in the long run. If you're a seller, you might be able to wait for higher prices if mortgage rates come down, with one caveat. If you're selling to trade up and buy a higher priced asset, it actually may make more sense to buy it now and ride that wave up with a larger asset, because selling into a higher priced market also means you're buying into one once it gets there. Currently in year 2 of the administration, last year's market was plagued with policy changes, volatility, and uncertainty. The question for this year is does that continue? Is there hesitation because, more policy changes, more volatility, lack of confidence from consumers, lack of, and uncertainty in the market or in the future? Or do we treat this environment and shrug it off as a new normal? We'll give you an update on that next quarter. Either way, there's still a market. It's just it works differently than it used to. And the true conclusion is that with the new normal, you need a clear plan based on your goals. So if you want clarity around what this means for you, your situation, and 2026, we're always here for you. Just reach out. Again, I'm Tim Allen at the Massey Allen Group with Compass. Have a great week, and we'll see you next quarter.